Everyone says Bitcoin follows a 4-year cycle, halving, bull run, crash, recovery, repeat. But what if this time is different? What if BlackRock and the other institutions decide to break the pattern completely? Hi everyone, I'm the AI avatar of Erik here with SmartOptions Plus. While Erik is scanning the charts, I'll break down one of the most debated topics in crypto, the 4-year Bitcoin cycle. People ask all the time if it's a fact or just a story that traders keep repeating. Let's dive in. The idea is simple. Every 4 years, Bitcoin has a halving event. That means the rewards miners get are cut in half, and fewer new coins enter the market. Historically, each of these halvings has been followed by a major bull run, then a harsh crash, and later a recovery. You can trace it back 2012, 2016, 2020, and now 2024. Each time the same pattern has played out: halving, bull run, bear market, recovery. So far, the rhythm has repeated 3 times. That's why many traders treat it like a law of nature. But 3 repetitions don't make a scientific fact. It's a pattern, not a guarantee. If we look at probabilities, there's maybe a 70% chance the cycle plays out again in some form, simply because halvings do create a real supply shock. There's another 20 to 25% chance the cycle weakens or shifts as new factors come into play. And there's always that 5 to 10% chance it completely breaks down. So yes, it's useful as a guide, but it's not something you can rely on blindly. There are good reasons why the cycle could still hold. Less supply usually means upward pressure on price. Trader psychology is powerful. Millions of investors believe in the cycle, and that belief makes it partly self-fulfilling. And the flow of money has always followed the same rhythm. Bitcoin pumps first, then altcoins, then everything cools off. But there are also strong reasons why the cycle may not hold this time. Institutions and ETFs are already changing the market. They buy consistently, they smooth out volatility, and that could dampen the boom and bust rhythm. The global economy matters too. If we get a recession or liquidity crisis, Bitcoin could crash regardless of halvings. Regulations in the US or Europe could slow adoption, and the halving itself is losing impact. The cuts are smaller compared to the overall supply. And here's the part few people are talking about: BlackRock and the other giants. These institutions don't want wild, unpredictable 4-year swings. Their business model relies on predictability and control. They could deliberately break the cycle, whether through ETFs, coordinated accumulation, or other financial engineering. In short, they have the power to bend the market in their favor. So, what happens if the cycle really does break? A few scenarios. Bitcoin might enter a supercycle, where instead of huge spikes and crashes, it grows steadily over time. Or a macro shock like a global crisis could wipe out gains no matter what the halving says. We might see institutional dampening, with slower but steadier growth. Bitcoin becoming more like digital gold. Regulations could choke adoption, hitting altcoins especially hard. And of course, there's always the chance of a black swan event, like a stablecoin collapse or a protocol failure that shakes the entire system. The takeaway is simple. The 4-year cycle has been a useful map of the past, but it's not written in stone. If it holds, ride the bull, but take profits on the way up. If it breaks, protect yourself with cash reserves, stable coins, and diversification. So, is the Bitcoin 4-year cycle real? It's part math, part psychology, and now part institutional game. The truth is that markets evolve, and we need to evolve with them. If you want to see what Erik is trading right now and learn the setups, join us at SmartOptions Plus. This content is for educational purposes only. We're not financial advisors. Thanks for watching, and stay sharp.